Welcome to lesson 3 of Trading Basics for Beginners. So hence the name, it is a beginner lesson. Trend lines and structure. My name is Selena and thank you for joining me in those lessons. Let's go over lesson number 3. Let's see what we can learn. And even the experienced traders, including myself, I always learn something. So keep your mind open. I understand it's a beginner one. Why this whole thing matters. We have a trend, and a sideways market. Many traders know how to draw the support and resistance, but they still take against the trend, right? And before entering any trade, is the market moving up or down or sideways? Today, I got caught totally in a sideways market. It was total downtrend, never bounced, and I got caught in it. So I did not recognize that there was a downtrend. I thought it was a pullback for it to go up. Part of it like being a bull trap, part of it of not recognizing that was a completely downtrend. But it is important. Every day we're still learning. Every day we still come out and see what we can learn out of it. So I do like to do those on a bigger time frame. So on a smaller time frame on your day trading is really hard sometimes because you don't see the big picture. So you see the big picture, especially on a bigger time frames for sure. And sideways market, people do trade this, in the range. There's a lot of range traders. They feel a little bit more safer in here versus getting caught in one direction or the other. What is market structure, right? We talk about market structure. So there's an uptrend and a downtrend. We did cover what it means to be in a bull market and a down market. And to recognize the uptrend, the next one is a higher than the previous one. So if we have here, it's a little higher, right? So they get higher. So if you draw the line, it goes up. And vice versa. What is a downtrend? I look for reversals a lot of times, but it's still a downtrend. So to recognize when is a reversal, when is continuation of the trend, it's pretty hard to do so, especially on the smaller time frame. So in the bigger time frame, we could recognize those for sure. And why does that matter? So in this uptrend, the buyers are more in control. So you're going to get paid more for going long, and vice versa. Here, the sellers in control, you're going to get paid more for going short, right? Can you make money on the long? Yeah, but it will be a small one because it's a pullback. It's not, the whole trend is down. And consolidation, it is no clear direction. You can still trade this. False breakouts, we talked about this a little bit. They false breakout either way, but that's when they sometimes call it false breakout. Some people call it hunting for the stop losses. Either way, what is your mindset? You're looking for the buying opportunities. You're looking for selling opportunities. This one says stay patient, or if you a scalper, you can definitely trade in the range. Uptrend, so higher highs. What is in the higher lows? So a lot of big words in my mouth. Higher highs, higher lows. So that means that the top of this one is higher than the previous one. This one is higher than the previous one, right? So that's what it is. So higher lows, the same thing. Pretty self-explanatory. So the trading mindset, looking for buying opportunities. We wait for the pullback, we add. We wait for the pullback, we add. But because you're going to get paid more because those are longer moves versus try to short it, reverse it. So you're looking for bullish confirmation candles to enter. So you manage your trade, consistency and results, confidence, and once you know the structure, it's a little bit easier not to get caught in the wrong trade. And I'm sure you guys all heard this, that the trend is your friend until the end. At the end that's coming, we have experienced it. Looks like market's gonna go up forever, and the last couple of days it hasn't been like that. Depending on when you're watching this stream or this video per se, is that market changes all the time. There's no guarantees. So we talked about the pullback, so I wanted to do this more visual slide. It was still climbing up, but markets do not move one direction. They don't move. So why they pull back? I think it's a really important lesson. Why is it pull back? Because it gets expensive and there's no more buyers. So market is doing what? Looking for more buyers. Well, they found the buyers because buyers step in here. They say, well, last time it pulled back, it went up. So it's enough pullback for me to go up. And it goes, and then there's no more buyers. So market does what? It's looking for the buyers. So by being patient in the trend, you can catch a lot of good moves. And a couple of ways to trade. Like if you feel like FOMO missing out, you're like, I didn't get into trade. We do what? We wait for the pullback. If we I had X amount of dollars, but I know the stock is going to go up more. When do we add? Do we add here? No, because we know it's going to be a pullback. So there's a couple of ways to trade. To get into trade, one to add to your trade too. Waiting for the pullback. right? There you go. Looking for confirmation. That's a hard one, but yes. So you're managing your risks and all that. What pullbacks do? So let's see what it says. They remove weak hands from the market. They create liquidity. That's a pretty big word. Liquidity for institutions to buy. What is liquidity? Liquidity is where the buyers are sitting or where the sellers are waiting to sell it to you, and then you're holding the back. I thought this was a beautiful slide. I really do think it's a beautiful slide. There's a bear, and so that's why the market goes down. And the bulls attack up. The bear, it's attacking. Now we're gonna go down on the bear. Is there pullback? Yes. Opposite pullback? Yes. But it's not strong enough candles for it to be reversal yet. So how do I identify? It's vice versa. Lower lows, lower highs. They break down support levels. When the bear comes down, it really comes down on you. They create fear, doubt, so people start pulling money out. So there's no more buyers, right? The market is looking for buyers. So there's no buyers. Everybody's pulling out the money. No one is putting money on it anymore. So the trend is your friend. Your ego is your enemy. Discipline is your edge. Yeah, ego is a big one. Okay, that's the most beautiful slide in this whole lesson. Falling knives. I have been cut with the falling knives, and being reversal trader, it's really hard not to, right? Because it's keep falling, and keep falling. We try not to catch it. We try to find the right support. We want to enter where the rest of the buyers are. So lesson is to absorb when the trend is over, when the buyers are stepping in, or if it still keep falling, you can go short and you can join them. You can definitely join them or wait it out till the bottom. You don't chase. We don't chase. We don't try to keep catching it. In a downtrend, price can drop faster than you think. Trying to buy just because something looks cheap can be one of the most expensive mistakes a trader makes. And we all been into that. We all read articles, this company is gonna go to the moon, or this politician said this. We all get caught in this. So I'm trying not to be too harsh on this because we all done it. And then we wait it out and we okay eventually if we're patient enough. And this one is probably very personal to me, that the market doesn't own you or reversal. Price can keep falling longer than you can stay solvent. I have been caught in this, definitely. It's not about being right. It's about staying alive long enough to be all right. So the calm before the break. So this is the range, right? So we talked about the fake breakouts, all that, yes, but the range eventually breaks out. So now everybody's chilling, right? It's accumulation. It is ranging right now. There's not enough buyers, not enough sellers. Everybody's just happy with this price. It's gonna break out eventually, either or. If they don't find enough buyers, it's gonna sell off. And if they do find too many buyers, they're obviously gonna take off. So the range is your advantage. So you can absorb. It's not no rush. You learn to wait. Just because one big candle came in doesn't mean that we're going in yet. We may not get the best price, like I always say, but at least you won't get caught too much. Range is not random. It is preparation. Preparation for what? That's what you need to ask yourself. What is this stock preparing for? Is there news coming up? Is there some earnings? So what sideways markets do? They create balance between the buyers and the sellers, which we talked about it. They build liquidity, okay? And then they allow institutions to accumulate a little bit. Maybe the money is in a different sector. Maybe it's a sector rotation. So this particular one doesn't have a lot of activity yet, but they're preparing for a big move. And sideways doesn't mean nothing is happening. It means everything is loading. It will load up, definitely. You have to be prepared for both sides. Consolidation. That's another word for range. It's also consolidation. The calm before the move, right? So it is resistance support. It is resistance. It's going very, very, very slow. We have to prepare. We have to execute. We can also absorb. The quieter the range, the stronger the breakout, they say. They're building up the energy to take off one or the other way. It allows price to rest after the move. I think I see that a lot in rotation time. One sector rotates to the other sector. So I see that a lot. And requires a lot of patience to wait it out for the breakout. So what is the trend line? I think trend line is a very subjective. You don't see me too many trend lines because sometimes say you can become an artist, right? Oh, I think the trend line is here, the trend line is here. But you try to catch some touching points. They say 2 to 3 touching points, even 2 can make a trend line. But be very careful because you think oh, it broke the trend line, I'm gonna go in. Or Not necessarily, right? So they're very subjective when it comes to trend lines, but it is a straight line drawn to a chart that connects the key points, where to bounce off. It shows a direction, right, up or down. It doesn't change. See, this is the thing. The trend line doesn't change the market. It just helps you to understand which way it's going. Is it reversal or is it just a pullback? That's all it really matters. In trendline world, I believe. I know some will disagree, but that's okay. And, to draw them 2-3 points is fine, right? The uptrend, the downtrend, and the differences. It shows you direction. It's simple and it is powerful, especially on a bigger time frame. You will see more areas of support and which trend they want to go. And you don't need a perfect line. This is what I mean. You don't need a perfect line. You just need to know which direction it's going. Identifying the uptrend or the downtrend, at least 2 significant, they say, but I think a little bit more will do better. But on a bigger time frame, you get to see more also. On a smaller time frame, it moves so fast is great, but also could fake you out because you're gonna be like the trend line set. So yeah, trend lines are dynamic, not static. Let price confirm. Trend line breaks. So they also, like I said, with trend lines, they do listen, they do respect, but they also will like to break because the reversals happen, right? So price breaks below the trend line, and here, this is the above, right? They break down it's no more this candle, it's not more lower anymore, and that's why they call it a trend line break. And the whole structure changes. Sellers step in this one, and then the buyers step in this one. So what can it signal? The end of the trends do end. They are your friend, but they will end. You don't panic just because some information came out or something. We have to wait for the confirmations. You adjust your plan, you pivot. You have to keep on pivoting in the market. You think you got it all figured out, we still have to pivot. So it just shifts, right? And then we have to redraw another trend line. Exhaustions of the buyers days, like I said, it's too expensive, it's no more buyers. So the market gonna go look for the buyers, which then the sellers step in. Broken trend line it's a clue, not a command. Just because it broke doesn't mean we have to go in. It's a clue. It's a clue that, maybe it's too expensive, right? Even the best stocks have to pull back because they can't find buyers anymore. So where the probabilities increase, so when we combine everything, the trend line, support, and resistance, your probabilities will increase. And the more you learn about the market, the more experience you have, your probabilities will be higher, right? So if you have the support zone, we have the trend line break, so your probability to achieve your goal, it is higher. And the best trades happen when multiple clues point to the same answer. And trend lines, confirmation, direction, support, better risk, and your mindset, you don't say can this work? You actually say, how many reasons do I have to take this trade? So we have a lot of reasons. So your probability it's not a guarantee, it's a probability. The trend lines checklist. See, before the planes take off, before we take off with all our knowledge that we consume, let's see our checklist. Let's see if we can take off yet. So one of them, amateur traders, they chase the candles, they enter because they're missing out, they ignore the structure, they hope. And not necessarily always hope. Like if I read the market wrong, like it did happen today, I read it wrong, I was not hoping for it, I just had to take my loss as a big girl because either I read it wrong or whatever reasons it happened, but it happens. I don't think people hope for it to turn around in your direction. It's just sometimes it catches you by surprise because even you calculated all your probabilities, you got still manipulated, or it goes totally in the wrong direction for you. It's market. They're not there to they don't own you anything at all. But let's see what professional traders do. They follow the structure, they wait for confirmation, they respect the risk, they follow a process, let probabilities work. Easier said than done. You hear me say that a lot. What trend I am in, so that's your checklist. Is there a valid trend line, support, resistance, confluences, risk? Does this fit my trading plan? Am I trading logically or emotionally? Have I managed my risk? And I think we all work on this every time, every day, every time we take a trade and every day, and the market is keep changing, right? So I think we have to keep pivot. So what worked 4 years ago doesn't work today. And what's going to work today, it's not going to work 4 years later. So we have to keep on pivoting and adjusting and being resilient to all of that. And that kind of ties into psychology. We trade the trend, not your emotions. And trend is your friend till the end. Definitely you want to understand where the market structure is. So let's say the market has been down a lot on the big time frame. Like let's say gold has been down a lot now, but on the bigger time frame, you start seeing some support. And then you go to like 1 minute chart to try to trade gold. And then it's like, oh, it should bounce, but it's continuing going because the time frame is so small. So emotionally, we also get really upset because eventually reaches your level because you did your analysis from a bigger time frame, which is the right thing to do. But emotions get in the way because we want to be right so much and we want to get paid also so much. You try the best you can to draw the respectful trend lines and draw the respectful breaks and then support and resistance. You do follow your plan. If it doesn't work out, you're gonna come back another day. You are resilient. You're gonna pivot again and do it again. And the thing that I would like to finish off is this: the market would always be here. Be the trader who is still here. The market's going to be here. You're going to come or not come. You're going to cry or not cry. It doesn't matter. The market's going to be here tomorrow with you or without you. You know? So did you survive today? Okay, you didn't. But then did you show up again tomorrow and learn again and being resilient and putting in the work, putting in the reps, and just keep going? That's what's going to make you successful in my personal opinion. So I hope you got something out of it. I understand it's a beginner one, and we're gonna hopefully continue with the next videos. Thank you so much.